What's going on, everyone? My name is Jeff. So my apologies, everyone. I've been very busy the past few days. Haven't had time to make very many videos. Looks like the stock market is running a little bit on the low volume side, okay? We're not seeing a whole lot of activity. Looks like the Dow is going up 200 or 300 points, then it's losing 200 or 300 points. And this trade war just seems to kind of have everything stuck in neutral right now. It doesn't seem like we can get back to that 27,000 point, and we don't quite dip all under the 25,000 point. Anyways, guys, look at this picture of Nelson Peltz I found. I think it is hilarious. I wanted to share it with you all. I sure hope YouTube doesn't demonetize this video, but you know, Mr. Peltz, he's an activist investor. I'm going to get more into Nelson Peltz's company, the company that he is with, and I want to talk about their investment portfolio in this video. Guys, I have found it very, very interesting. Now, if you want more of a detailed background on Nelson Peltz, I made a video back in March about their strategic partnership between Aurora Cannabis and Nelson Peltz. Kind of give you some background, give you all the details, kind of fill you in on what this man does and what he has done over a career. He's a very, very impressive dude, and I would certainly check out that video. I'll have that pinned down in the comment section. Feel free to go back and watch that video if you like. So Mr. Peltz is a legendary value investor. I got to looking at some of the positions he owns a lot of the same stocks that I do, and it's interesting that some of the same stocks he owns were some of the very first stocks that I bought many years ago, some long-term positions. Like I said, my favorite restaurant stock out there, Nelson Peltz owns, so that makes me feel a whole lot more confident about owning it for the long term. We're going to get into that in just a minute, guys, but first, if you don't mind, please drop a like on this video. I appreciate all the support, and make sure to subscribe to the channel if you have not done so already. So let's talk about the company Trian Fund Management, okay? This was founded in 2005. This is Nelson Peltz's multi-billion-dollar investment management firm, and it has approximately 50 employees, okay? So it's a highly engaged share owner that combines concentrated public equity ownership with operational expertise. And let me tell you guys, this portfolio that they manage has a true concentration on value, okay? You're not going to see a lot of aggressive moves. You're not going to see Shopify stock or Roku or Amazon or Netflix. You're not going to see a lot of tech. They're very, very heavily focused on value companies. Nelson Peltz, of course, he's here on the left. You have Ed Garden, who's in the middle, and Peter May, who's on the right. So you might want to look those two gentlemen up and do some research on them as well. But I've really took an interest into Nelson when he announced his partnership with Aurora Cannabis back in March. Of course, most of you remember the stock jolted about 15% after that announcement was made. This portfolio is certainly not as impressive as anything like maybe Warren Buffett would invest in, you know, not nearly the size of maybe a Berkshire Hathaway, anything like that. But his 13F portfolio value increased from $9.34 billion to $9.48 billion this past quarter. And the number of positions increased from 8 to 9. Now I will show you the entire portfolio in its completion. I just want to walk through this step by step first, guys. Is that they did take a new stake in Legg Mason, ticker symbol LM, okay? It is roughly 1.5% of the portfolio. This position was established in May at around the $35 price range. So I really like that. I like that they're telling you around the price that they invested into the stock. And so shortly after they bought into Legg Mason, they appointed Nelson Peltz and Ed Gardner to their board, okay? And Trian currently owns around 4.5% of this entire business. So they definitely got their hand in the pot. Let's go take a quick look at Legg Mason. It is on my daily watch list now. Right off the bat, guys, I can tell you one thing I'm attracted to about this company is the 4.4% dividend yield, okay? And luckily enough, LM is still trading at roughly where Nelson Peltz bought into. It's trading at $35.83. So right here, I do have the 5-year chart pulled up. And if you exclude a couple of these little dips, guys, it is actually in a very reasonable place right now to buy into this stock. As you can see, back in 2015, this stock was trading at over $60 a share. Then it had a tumultuous year in 2016, trading all the way down to the $25 to $30 level. And really, guys, this stock has just not seen a lot of action since. You did see some highs here in early 2018 where it was back close to $50 a share, but by December of 2018, back down around $23 to $24 a share, and now is stabilizing and maintaining itself around $35. So this might be a really good stock to look into for the long term. Currently has about a $3.1 billion market cap. And of course, when you look at the max charting, it does look like it got involved back in the dot-com bubble, and it looks like it run up really high right before the 2008 recession and has just failed to really get back to the levels it once traded at. So this might be a good value stock to look into. If you'd like to see a video with a fundamental breakdown on Legg Mason, go down to the comment section and mention that. I will try to do that when I get some spare time. All right, let's move through some of these kind of quickly. They did increase their stake in Cisco Corporation. This is their second largest position, and it is roughly 18% of the portfolio. They first started buying it in Q2 of 2015 between $36 and $39. Then they increased their position by 300% the following quarter at prices between $35 and $41. So very good purchase made here, guys. The stock currently trading around $72. They also added to their position in Mondelez International. The ticker symbol is MDLZ. This is a top 3, which is roughly 11% of their 13F portfolio position. And their original stake in this company was from Q4 of 2012 when they bought over 19 million shares. Now the stock currently trades at well over $50. So again, very nice position. And this position should be approaching roughly a 200% return. They also had some decreases, okay? Now this really comes as no surprise that they decreased their position in Procter Gamble just simply because Procter Gamble has had such an outstanding year. But their stake was established in Q4 of 2016 around $82 to $90 a share. Stock currently trades around $117. Of course, as you all know, Procter & Gamble is the bread and butter value stock, okay? Every value investor out there pretty much in the world owns Procter & Gamble. And this was the second stock that I bought many years ago when I first started building portfolios. So this position makes up 42% of their portfolio, and there was a 3% selling last quarter at $99. I'm sure they just sold some of their Procter & Gamble stock so they could buy into other positions. Now, of course, like any portfolio, guys, there has to be some cringe to it. We all have some cringiness in our portfolio somewhere, guys. They did take a stake in General Electric. Like I said, I just published a video last week where I talked about going short and buying put options on General Electric around the $9 mark, guys, and we've already trimmed about $1.10 off that position. Those put options that I do own in GE, guys, are currently yielding about a 45% return. And so I plan to cut that position in half once I hit 100%. But anyways, they bought stake into GE in Q2 of 2015. Then it increased by 83% the following quarter. And they had a cost basis between $25 and $31. Ouch. This one really got nailed. So there were some marginal increases in the last 4 quarters, but they trimmed their position 9% at the $9.75 mark. So they really took a beating on this one. Now they trimmed their position in Bank of New York Mellon. I'm going to kind of move through these a little quickly, guys. Ticker symbol on that is BK. And they trimmed 5% of this position. PPG Industries was about 5% of their portfolio. And it looks like they've consistently increased on this position, even going back to Q4 of 2018. Okay, and the stock currently trades around $107 a share. Ticker symbol NVT, that's Navent Electric PLC. So that represents roughly 4% of the portfolio. NVT started trading at around $25 and it now goes for roughly $20. This quarter saw a 23% selling around the $25.50 per share. Now this right here is what made me fall in love with the portfolio, guys, is that they're heavily invested into Wendy's. Their Wendy's stake goes back to 2005 when Trian Fund Management was founded, okay? So when you talk restaurant stocks, mostly you're going to hear McDonald's, then Starbucks, then Chipotle. Very few people ever mention Wendy's. Wendy's is my favorite restaurant stock. I've owned it since 2014, and Wendy's has been such a great stock, guys. I would never sell a share of it, and today it was up over $21, okay? Alright guys, so here is the portfolio in its completion, okay? Now you can see that first column, that is market value of June 30th, 2019. Feel free to pause the video, and look at this for as long as you want. Obviously their biggest stake being in Procter Gamble, which they hold well over $4 billion of, and that's 36 million shares. So real quick, I would like to know what a 1/4 dividend payment is holding $4 billion of Procter & Gamble stock. Give me just a second and I'll come back and tell you. So there you go, guys. That's your answer. For just 1/4 holding their stake in Procter & Gamble, Trian Fund Management gets a dividend payment in 1/4 worth $27,326,385. So that means they get over $100 million a year in dividends just from Procter & Gamble. Oh, that is enough to make me sick. And of course, Cisco Corp, that is roughly 17% of their portfolio. They have over $1 billion holding. Mondelez, they have well over $1 billion holding. Now, General Electric, that's roughly 8% of their portfolio. Now, I think General Electric is in trouble in the short term. This is one they might feel is going to pay off in the long run, but I really worry about that, being that Trian Fund Management relies so heavily on dividend payments, and General Electric only pays a penny per share per quarter now. I would be tempted to let this position go, but hey, to each their own. They might have long-term vision that GE can turn things around. And of course, Wendy's, that's roughly 6% of their portfolio. Bank of New York Mellon, roughly 7% of their portfolio. PPG Industries, 7%, and of course NVT being about 5%. And then lastly, Legg Mason, that being their new position, that makes up roughly 1.57. So if you're a value investor and you like a little bit of growth, keep in mind, guys, some of these stocks have performed wonderfully. And of all these stocks, I do own Procter & Gamble and Wendy's, okay? I'm also very interested in Legg Mason, and NVT has also caught my attention as well. So go down to the comment section, guys. Tell me what you think about this portfolio, and also tell me, do you think they should go ahead and sell their position in General Electric, or just keep riding it out and hoping for a turnaround? I know their cost basis is still way up there. I would honestly take that money in GE. I would put it in Wendy's, Procter & Gamble, and probably Mondelez. I would spruce those positions up and just let GE go. But anyways, guys, that's all I got for the video. Thank you as always for watching.